Hi, Charles Sizemore here, coming to wish you a happy Black Friday. You will not find me anywhere near the shopping malls this Black Friday. You won't even find me in the contiguous United States of America. I'm actually in South America, running away from Black Friday. That's a half-truth. I'm in South America visiting family. That has nothing to do with Black Friday. But about that, I am not sad to be missing the chaos of Black Friday. The chaos of South America is a different story altogether, but at least I'm not having to fight for, fight the crowds for a big screen TV or whatever. Anyway, you're going to hear a lot about Black Friday in the news for the next couple days. That's going to dominate the business headlines. And the reason is this is the most important time of the year for the retail sector. This is really the time of year where they either make it or they don't. Their sales from between now and Christmas will basically determine whether the year was a success or not. I would say view these numbers with a healthy grain of salt. What we've seen already over the past couple weeks with some major retailers announcing earnings for the prior quarter, Wall Street is taking these with a healthy degree of skepticism. So while the numbers coming in have generally been pretty good, the American consumer does look good right now. Consumer confidence is at the highest it's been in a long time. Incomes are rising. Yeah, everything looks good. The issue is it looks a little bit too good. These are the kind of numbers you tend to get towards the end of the cycle before things tend to roll over. So right now, that's really the narrative. Wall Street is looking at sales data for clues, but it's looking more and more like we're at sort of the end of this expansion, or at least in the late innings of it anyway. More fundamentally, you look at the stock market today, prices are extended, valuations are extended. You look at the price to sales ratio, we're actually at levels higher than we were during the dot-com bubble. If you look at the Shiller PE, the cyclically adjusted price earnings ratio, we're not quite that expensive, but we're certainly well on our way. At the same time, the Fed is raising rates. You have bond yields that are probably not going too much higher than they are now, but they're still at multi-year highs. You do have economic slowing in most of the world right now outside of the U.S. So it is a pretty rocky patch right now. What I've been telling people to do is not necessarily run for the hills, but just keep a little bit more cash than usual. For example, our 401k allocations in peak income, I'm recommending people be about 50% in cash and bonds, 50% invested in stocks. That's a decent baseline for now. Just more than anything, be cautious. Don't necessarily go dig a bunker in Idaho and hide in it, but just be a bit more careful right now. We are at a time of year, though, when seasonally stocks tend to do better. We tend to get that so-called Santa Claus rally in December, which usually bleeds over into January. I don't know that we're going to get that this year. We'll see. But I would say right now, the risk that this correction we're in slides into something more significant and the possible benefit of just stocks rising higher due to seasonal reasons or what have you are roughly balanced. So to me, that calls for just taking a middle road. Keep some money in the market, but just don't overdo it. But that's going to wrap it up for today. This is the Thanksgiving extended holiday here. You really don't need to be thinking about the market right now or shopping. Just spend time with your family. Watch a football game with your spouse, your kids. The weather's nice. Get out and toss a football around yourself. Have fun. This is the time of year to kind of disengage from the markets a little bit and just enjoy your family. So with that, a happy belated Thanksgiving, happy Black Friday if that's a thing, and I hope you have a good Christmas, good New Year's.